So after a gap up, if we get a tight range that forms, look for a breakout through that range pivot here, and that can be a great spot to enter. So again, after a strong gap up for a catalyst, stocks will often tighten or U-turn. We'll get a gap up and then a tightening in price and volume action. This will be shorter than a larger VCP, but basically be the same thing, condensed. So we're looking for lower volume on these pullbacks and tightening and subtle higher lows if possible. And even better, if we get a shakeout that then gets bought up and forms a higher low, that's ideal. And again, this allows us to manage risk tightly and logically. And when gaps are in vogue, this is an excellent entry technique that can really get you on some of the high flyers. Last year, Sezzle, Dave, there were so many earnings gaps that, moved a tremendous amount. And, it's hard to get on those, but you can find a spot using a tight VCP after that gap up. So again, tight areas can help you position with size after a stock has already shown that it is special with that gap up. Here's an example from Reddit. This is one I traded personally. I had positioned before it, but also it pushed higher, then pulled in and formed a tight range. You can see R and V went down to 0, volume declining as we're pulling back, constructive price and volume action, and then we get a breakout through these highs, this tight range. Entering here, I added in this case, and you're off to the races and are positioned nicely for the resulting move. So again, after an earnings gap, move higher. Look for a range, the first pullback, the first higher low, and look for lower volume on the pullback, and then a tight range to form where you can manage risk. That's the name of the game. We have to be able to manage risk, and this gives you a way to do that. And RMB going to 0 after that is a great way to objectively say, okay, ranges have tightened. We're looking for expansion that reconfirms the move we saw with the strong gap up. So train your eyes, look for tight areas of VCP action, looking for tight ranges, tight closes, low volume at the right-hand side of a base. These tight ranges can be as little as 2 to 3 days, so it can be pretty subtle. And this is where, it gets complicated, especially for newer traders, because it can be hard to spot out these ranges when you're not quite used to looking at, many, many charts. Everything might look like a tight range, but we'll kind of walk through how to, train your eye, and also talk about how RMV can help in the situation, especially if you're new at this, to at least confirm that yes, what you're looking for is a tight range. So again, tightness can be even 2 to 3 days, and we'll go through some examples shortly here. So here's Palantir. I don't really have the ranges marked here, so take a moment, look for yourself, follow the stocks chart from left to right, and try to identify any tight ranges that you can see. And again, these can be as little as 2 to 3 days of tightness where the market, the stock pauses and goes sideways, drifts slightly lower. That's what we're looking for. So let us see, what we can find. And I'll show the example in just a minute here as I get a sip of water.